Are you a family caregiver navigating the complex world of dementia care? Do you worry about how to provide the best possible support for your loved one while also managing the daunting financial realities? Well, you're not alone. Many families find themselves at a crossroads trying to balance quality care with dwindling resources. But what if there was a way to unlock a significant asset right under your roof that could ease the burden and provide peace of mind? A way to ensure your loved one can age in place comfortably, access the care they need, and preserve their dignity without compromising their future or yours? Join us today as we explore a powerful financial tool that's often misunderstood, the reverse mortgage. We'll cut through the myths and show you how this option could be the key to essential dementia care, funding, necessary home modifications, and truly transforming the journey for your family. Stay with us, you won't want to miss this. Welcome to Fading Memories, your source for all things dementia caregiving. I'm your host, Jen Fink, and I have had 3 generations of loved ones with dementia, and I'm here to share the knowledge I've gained with you. Welcome back, Fading Memories listeners. It's Jen Fink, your host. Today we're talking about how we can finance aging in place, home renovations, and the all-important dementia care. With me to facilitate that conversation is Kevin Gutman. He is the author of the book, How a Reverse Mortgage Changed My Life. So I want to welcome Kevin to the show. Thanks for joining us, Kevin.
Hi, Jen. Thanks for having me. Good to be here.
You're welcome. So why don't you give the listeners your background? And I don't remember if you had a connection to a family member with dementia or not. So you can fill us in on that part too.
Yeah. So I grew up in Orange County, California, right near Disneyland. My dad was in real estate. He was a realtor and an investor, and he also trained new agents. So from the time I was a little guy, I was learning about real estate. He'd take me to look at property with him and help me understand what a good deal was and such. So I've been around real estate my whole life. When I started my career, I worked for a nonprofit, and I used to travel around the country, meet with donors, and raise money for people in the developing world so they could have clean water, medical clinic, schools, small business loans. And I met some amazing people. It was very rewarding work. But I was traveling about half the time, and my wife and I have 5 kids, and I just needed to be home more. So I left that the end of 2002. And my wife has a real estate background as well. So we started flipping houses. Ultimately, in 2004, I got into mortgage. 2007, I was trained in reverse mortgages, but there were some things about them that I just wasn't sure about, wasn't comfortable with. So I just kind of put it on the shelf. In 2015, the government, through HUD and FHA, changed those things that I wasn't real comfortable with and made the program much safer for seniors. And so for the last 10 years, most of my business has been reverse mortgages. And, you talked about the book. I wrote the book based on stories from my clients on how reverse mortgages have improved their lives.
So tell us exactly how a reverse mortgage works. I mean, it's so basically self-explanatory to a point, but it's probably not quite as basic as one would assume just from hearing the words.
Yeah. So it's very similar to a traditional mortgage in that you stay on title, but there's a lien against your home. The lien has to be repaid when the last borrower moves out permanently. This has to remain a homeowner's primary home. They have to maintain it, pay the property taxes, insurance on time. Now, here's where it gets a little different. The term of the loan is 150 years. In other words, they've designed it so somebody can't outlive it. Another thing that's different about a reverse mortgage than a traditional mortgage is there's no payment required. So most loans have a monthly mandatory payment. With a reverse mortgage, that's not the case. And then the final thing that's different than from a traditional mortgage with the reverse mortgages, these loans are non-recourse loans. What that means is the borrowers are not responsible to pay it back. The only way the lender can be paid back is through the sale or refinance of the home. So term is 150 years. They're not responsible to make a monthly payment, and they're not responsible to pay it back. I know it sounds too good to be true, and we'll dig in more, but that's kind of the big picture. That's the good overview of how it works.
So my impression, and maybe this is the way it was before, is if you had $500,000 of equity, you could reverse mortgage until you reached that max. But that's not the case anymore?
So what happened is in 2018, the government changed the amount that somebody could borrow. It used to be 60%. Then back in 2020, when rates were 3%, it was about half. Now it's about 35 to 45% that somebody can borrow. How much somebody can borrow is based on three factors: age, interest rate, and value of the home. So in a $500,000 house, if they're 62, they're probably borrowing about 170. If they're 72, they're probably borrowing 40% of that, which would be 200,000. 82, it's more like 45, maybe 48%. So about 250. As interest rates come down, borrowing power goes up. It's just like a traditional mortgage, right? Higher interest rate, less borrowing capacity. Same thing with the reverse mortgage.
So you definitely don't want to do a reverse mortgage too early in life, because my mom was in memory care the last 3 years of her life, and that was just over $250,000 for the 3 years.
Well,
So
that depends. So if somebody's young and they have their house paid for, they should do it immediately, because young meaning 62. Because you remember, Jen, when we were in our 20s, the financial advisors would tell us, start investing now. You'll never get this decade back, because you want time working for you. So these loans can come with a line of credit that works in your favor. So let's just say the interest rate for reverse mortgage is 6.5%. 0.5% higher would be the line of credit, so 7%. So somebody in our example, $500,000 house, they're 62. They take it out at 62, and they can borrow, we're going to say, about 170,000. If they don't touch that money, it's going to double in 10 years. Now it's 340. Now they're 72. They can convert that to lump sum monthly payments. Most people don't have long-term care insurance, and that's one of the things we want to touch on. And this is a way for them to self-insure. In other words, they can turn their equity into money to pay for long-term care insurance, whether they pay it by a policy or they pay somebody to come in and care for them while they're still at home. So let's say they don't need it yet, and they let the money ride again. From the 340, now at age 82, it doubles again, and now they're 82, and they have 680,000 that they can do anything they want with except buy an annuity. That's the only restriction the government puts on them. They can use the money any way they want except purchase an annuity. So it is an option for people to self-fund or pay for care from their equity.
now what happens if the house isn't paid for? Is this reverse mortgage, I'm assuming, it's not an option then?
Yeah, so really there's three ways that people can use it. So the first way we just talked about is access equity. They own their house outright, or they have a ton of equity, right? Very low mortgage balance. The second way, which is the most popular way, eliminate monthly payment. So think about this, Jen. The biggest expense somebody on a fixed income has is their monthly mortgage payment. If we take that off the table, they don't have to pay that anymore. Now we freed up that money. They have more money to live on. They don't have to sweat their bills every month. They can breathe a little easier, sleep better at night. So the second way is to eliminate monthly payment. The third way is to finance a new home. So, a lot of times a senior has lived in their home for years. They raised their family there, and a lot of memories and such. But maybe that home doesn't suit them in this stage of life. Maybe it's hard to navigate the stairs up and down. Or maybe they don't want to clean the house or maintain the yard or shovel the snow or whatever, all these things that we have to do as homeowners, right? So they can move to a house that better suits them in a stage of life. Make one down payment, not have a monthly mortgage payment. So they'll sell their house, take some or all of that equity, put it into another home, one down payment, no mortgage payment. So in effect, they can have a newer home with updated amenities, no deferred maintenance, live in the part of town they want to live in, and no monthly mortgage payment.
Hmm. And is there an age limit? Like you have to do this at like 62 or?
So we have two programs. We have the FHA backed program called the HECM, Home Equity Conversion Mortgage, which was passed by Congress and President Reagan in 1988. Then we have proprietary reverse mortgages. HECM is age 62, at least one borrower needs to be 62. The proprietary or the jumbo, both parties need to be 55. So where you live in California, we have a lot of properties over $1 million, and that's where the jumbo proprietaries are more advantageous. In a nutshell, the proprietary, the costs are lower and the interest rate's a little bit higher. And the reason the cost is lower is those loans don't have mortgage insurance. So let's talk for a minute about the downside, if we could, of a reverse mortgage, because people hear this and they say, well, it sounds too good to be true. What's the catch, right?
Mm-hmm.
The catch is it's not cheap. This is the most expensive loan somebody can get because they have mortgage insurance, upfront mortgage insurance. So in our example, $500,000 home, it's 2% of the value of the home, $10,000, which is rolled into the cost of the loan. Well, most loans don't have that. But what that does is that makes it a non-recourse loan. So there is no debt that can ever be passed on to the borrower, to their estate, or to their heirs. I know that's a concern a lot of seniors have. They don't want to leave debt to their kids. That cannot happen with a reverse mortgage because of this mortgage insurance. But it also makes it a very expensive loan.
So how does the loan get technically paid back? Yes, that's where I'm getting all confused.
Yeah. So there's no payment required. A payment is taken out of equity each month. Interest is charged each month against equity. So because somebody's only borrowing 35 to 45%, they're paying interest on a small amount and the appreciation is on 100% of the property. There's almost always equity at the end. So equity continues to grow by appreciation. They don't have a payment. They can access funds, so they have a better retirement. At the end, when the last person moves out permanently, they go to heaven or they go live somewhere else, assisted living or whatever it would be, then the loan becomes due. The heirs or the estate or the borrowers have up to 6 months to sell or refinance the home, pay off the mortgage due. Whatever is left goes to the heirs, to the estate, to the borrowers, etc. And so it's actually pretty simple because if somebody had a traditional mortgage, they would still have to be making the mortgage payments during that time. With a reverse mortgage, as I said, there's no mortgage payment that's required. So they have up to 6 months to sell. If they need more time, they can get 2-3 months extension. So basically, they can have as long as a year that if needed to sell the home.
It's even in this economy should be plenty of time. Don't get greedy with the price. My husband's also a real estate broker, but he mostly does property management. So I'm not even sure if he's aware of all the changes with reverse mortgages because obviously that's a mortgage broker, not a real estate broker, but they kind of overlap a little bit. So let's use my
2009,
Mhm.
talking about real estate for a second, the Congress and President Obama, passed a bill where somebody could finance a home with a reverse mortgage, like a VA loan or a conventional loan or an FHA loan. But they could buy a house and the financing can be a reverse mortgage, and that didn't exist before 2009. So it's so similar to traditional mortgage, except it's a different way to think about it because people aren't used to not making a payment or having access to their equity, and etc., not having to pay it back, right? 150-year loan term. These are kind of unique features of a reverse mortgage.
Yeah, we're kind of programmed to, we're making payments even after we're dead. So somebody's got their hand out for something. I mean, after my parents were gone, there's obviously um not my parents weren't buried, but burial costs. But like 6-9 months after my parents are gone, the hospital's got their hand out for, some invoice. I'm like, where the hell have you guys been? So yeah, it's a concept that is hard to wrap your head around. So now with my mom, because she didn't live in the house, she or I would not have been eligible to do a reverse mortgage.
Correct. Has to be a primary home, cannot be a second home or an investment property.
So what I'm thinking is like there's a lot of caregivers like myself who are caring for a parent. Now my mom's house was paid for and we rented it out, and the rent and her social security covered pretty much 95% of her needs every month. I did stress constantly that she would run out of money, even though, I assumed she was going to live more than 3 years, but I'm still worried about it. And we got to sell her house at the height of COVID, so that was a boon. I still feel bad for the family that spent that kind of money on a house that was built in 1970, but whatever. What kind of and this is like a little bit tricky. So if she was living with me, would I have been able to do a reverse mortgage like on my house to help fund her care?
If your property is over $1 million and you and your husband were at least 55, then yes.
Well,
And if you had
50 when she moved to memory care.
65% equity, then yes, you could have.
Okay. That's good for other people to know. I don't think we qualified at that point. I wasn't old enough. That's the biggest catch. So
now let's talk for a minute about the property types, because people always want to know, does their property qualify? So these loans can be taken out on single family homes, townhomes, condos, 2 to 4 unit buildings, as long as they occupy 1 unit, and even mobile homes, manufactured homes. So those are the property types that work with reverse mortgages.
that pretty much covers all of them except for like multi, unit apartments, which that fits into a whole different category anyway.
Like a co-op would work, right? And if they don't own the land, like sometimes a mobile home's on lease land, that doesn't work. But you're right, for the vast majority of properties, it works.
I don't know of any mobile home communities where they don't rent their space. That's interesting and tricky. So these are all good questions.
Yeah, a lot of times that's somebody that lives outside of a mobile home park that would do that.
That makes sense. There's a beautiful mobile home park just up the hill from me. Most of the homes have they look like they might be a single car garage. They look like they have a double car garage door. I'm not sure they're double car wide deep in the front. And then some, it looked like without, traipsing down somebody's walkway. At least like a small yard area, like patio size yard. So I was there right before Memorial Day, and like almost every home had a flag flying on it. It was really nice. And of course, we're up here in the Sierra foothills. They're up higher. So they had lots of pine trees. It was beautiful. It was the best looking mobile home park I'd ever seen. So I was there for the Alzheimer's Association doing some community education. I was like, oh,
Well, I've got some great stories if you want to hear some examples of
definitely.
So, the very first lady I helped was referred to me by her daughter. She was 84 years young, 5 foot nothing, and just full of fire. Her name was Carmen. And I asked her, I said, "Hey, Carmen, why do you want to do this?" She lived in a duplex, lived in one side, rented out the other side. The rent from the duplex covered her mortgage payment, and then she lived on Social Security. So I said, "Hey, why do you want to do this?" And she said, "Well, to be honest, my budget's tight." I'm like, okay, I get it. A lot of people say that on a fixed income. Tell me more about that. She said, "Well, to be honest, I'm using credit cards to buy groceries."
Ooh.
So at the closing table, I'm doing the math, freeing up her mortgage payment, paying off the credit cards. It was just a little shy of $1,200 a month that we're freeing up on her budget. So I said, "Hey, Carm, what's this going to do for you? How's this going to help you? I know the math, but how's this going to help you?" She kisses me on the cheek. I had to go home and tell my wife we got kissed at closing by an 84-year-old lady. But she said, "This is going to help me sleep at night. I don't have to worry about money." She stayed in a home another 10 years, still had equity at the end. She got to the point where she needed to go live with a family member to care for her. She just needed more help. Sold her house and still had money left over. So that's the H for P. That's the financing a home story. Another one was access equity. So there's a lady in Grand Junction, Colorado, Grandma Pat, and she owned her house free and clear, and she's single. And I said, "Hey, Pat, why do you want to do a reverse mortgage?" She said, "Well, I have 3 grandsons, and my daughter's a single mom. I was a single mom, and I just want to make some memories with my grandsons while I'm here. So I've got this 500,000 sitting there earning nothing. I'm going to take part of that and start having it grow by compound interest, insured, tax-free, and a line of credit. Then once a year, I'm going to take that growth from the line of credit. We're going to go on a very nice vacation." So this summer, this summer, she took her 3 grandsons to, what's the island in the Caribbean that's St. Kitts, Nevis and St. Kitts?
That's one of them, or two of them.
Nice. Yeah. She took her 3 grandsons down there, and she said, "I want these boys to know how much I love them. We want to make some memories, and I want them to remember me when I'm not here anymore." Another couple, I helped with eliminate their payment. They were missionaries in the former Yugoslavia for years. And I go to their house, and they say, "We don't have a lot of money," as most missionaries don't.
Right.
"We have this house, and, can we do a reverse mortgage?" Sure enough, eliminated their monthly payment, which helped them to enjoy their retirement years a little bit more. And then a few years later, with property values going up and interest rates staying low, they worked with me to refinance their reverse mortgage. They pulled some cash out and gave a gift to their daughter for down payment so that she could buy her first home and start building wealth with her. So, no, these are just a few of the stories in the book, but these loans really do change people's lives. I'll share one more. Financial planner sent me a client who got sick and could no longer work. And so it was kind of a hybrid situation. We eliminated their payment, $1,200 a month, but then they accessed their equity, about another $800 a month or $1,000 a month. I don't quite remember, but it was over $2,000 a month they're receiving now in extra cash flow to live on, which basically replaced the part-time income he was earning before he got sick, and allowed them to stay in their house. This is what it does in a nutshell, Jen. It allows a senior homeowner to remain in their home. 91% of people want to age in place, retain ownership of title, gain access to their equity, entertain the lifestyle they've dreamed of and worked for, and refrain from having a monthly mortgage payment. That's it in a nutshell. That's what it does.
That's awesome. And this is why I wanted to talk to you, because it's like I think more people need to understand that this is an option. So we just moved into our house 3.5 years ago. Neither of us are 62 yet. Getting close though. What kind of things would we want to consider, being self-employed all these years? We don't have a huge amount of retirement or savings. We don't have a huge amount of equity right now, but it is growing because, prices aren't going down. So what kind of things, maybe somebody like me, maybe you're in the early stages of taking care of a parent so that, their needs aren't quite as financially challenging as they might end up. What kind of things should we be considering doing to kind of like put us in the best position to take advantage of a reverse mortgage? I hope that made sense.
Yeah, good question. So I always ask people, how long are you going to stay in your home? If they're not going to stay at least 18 months or 2 years, we really encourage them not to do it, because they're not going to recoup the money. Somebody like you, though, it's better to do it sooner rather than later if you can, because let's just say you're 62 and you have enough equity, you have the right property type, you have enough income to show you can pay the property tax, insurance, maintenance on the house. Most people qualify with their pension or Social Security, or if they have a job, they certainly qualify, because there's no payment. They don't have to prove they can pay a payment. But what they do is they get the reverse mortgage, have no monthly payment anymore, and they repurpose that payment, as it were, into their retirement funds. So let's say they're going to work another 8 years and their mortgage payment is $1,500. That's
I wish.
1,000. Oh, we'll round it up. We'll say 2,000. That's 24,000 a year times 8. that's almost 200,000 that you can now beef up your retirement account. We didn't even count interest with that or growth with that. But now you've got a nice chunk of retirement funds available to you that you didn't have before.
And you're 10 years older, 8 years older, so you technically have less retirement years to need that money. So kind of works out both ways. This is really helpful. So like what I should know all this because not only did my husband a real estate broker, he was in banking for 20 years. He did banking for 20 years. He's done real estate for 20 years. Now he's in charge of our private security in our community. Why the hell he wants to do
You
that?
know what's interesting though is banks really don't offer these. They're really offered through mortgage companies or retail companies or brokers like myself. I may be biased, but I feel like it's better to work with a broker because there's 16 companies that issue the paper or underwrite these loans.
Oh,
We work with 13 of them. The other 3 we don't want to work with. So we work with 13 of the 16. So we have all kinds of options for people who are, considering this. And by the way, this is big education. So, I really try to help people understand how it works. I've written a consumer guide, which people can access on my website for free. I've got a YouTube channel and a robust website, written books. The whole idea is to help people understand how it works and if it can help them. And whether somebody ever does one or not, they owe it to themselves to learn about it.
yeah. The more options you have, the better, because then you're not. I always frequently get on my soapbox and talk about how, we need to have open, almost emotional conversations about how we want to live, the last 10 or 15 years of our life. Like my paternal grandmother lived to 103, and her mind was great. She was mostly blind from glaucoma, and she was a huge burden on my aunt, mostly because she had some very staunch ideas like family does for family. She had plenty of money to take the burden off my aunt. My aunt, who was her daughter-in-law. I can trip over my tongue. She and my uncle, my grandmother's middle son, they were the closest ones. And plus my dad wouldn't put up with his mom's stuff. So, there was just options. And then I think she probably wanted to make sure that she had plenty of money to live, that there was money left to inherit, although she did disperse a lot of people's inheritance while she was still living. I'm still living. I was gonna say while we were still living. That didn't make sense. So it's important to understand the options so that we can make a better decision than having to decide, oh, my dad has just passed away. There's no way in heck my mom's living with me because she and I would not have survived a week. And I had to make these emotional decisions, these difficult decisions, grieving and not in a panic so much, but just, under extreme pressure. So that's why I like to have these conversations, because people, if you don't know, then you don't have access to the opportunity. So.
And Jen, this loan is the safest loan that somebody can ever get. There's been so many safeguards built in to protect seniors because seniors are a vulnerable population. So an example of that is they have to do counseling with an independent third party. They can't just take my word for it. They've got to go to an independent third party counselor to make sure they understand how the program works, make sure they're not being coerced or pressured into doing this, make sure they're of sound mind, they can make good financial decisions. The government, if they do the government program, they can't access all the money at once. You've probably heard stories of people who win the lottery and 2 or 3 years later, they're worse off, right? The government is protecting people with that. Obviously there's an appraisal that's done. So we make sure we get the accurate value. We get a title report to make sure there's no liens against the property that the borrower's not aware of, which is similar to a traditional mortgage. But there's just different safeguards that are built in. The government monitors and caps the fees that we can charge. We have to be licensed. We have to do continuing education to even offer these loans. So there's lots of ways that the government has worked to make sure this is a safe program for seniors.
So going back to the example of, an adult child having to care for a parent, regardless of whether they have dementia, because that happens in a lot of cases. What should they be considering? Would they be better off to move into the parent's home and then do a reverse mortgage? Or I'm just trying to, I know that happens. I mean, moving in with mom to take care of mom, that does happen a lot, or dad, whatever.
I always ask people, at the beginning, how long do they want to stay in their home? What are the other options? If you don't want to stay in your home, are you willing to sell? If so, where would you move? Can you move in with your kids? Do you want to move in with your kids? They always groan with that. They don't want to do that. Do you want to take in a boarder? They don't want to do that usually. So it's stay, sell, move, or, adjust your lifestyle. I met with a client recently, had an $800,000 house free and clear, but they didn't have enough money to live on.
Mm.
And I said, look, you can either do a reverse mortgage and access some money, because a reverse mortgage can pay you three ways. I don't know if I mentioned this. Lump sum, monthly payments to you, or the line of credit. We talked about the line of credit. Or I told her, I said, look, you might need to move, sell this house, buy a more affordable house, and then put a down payment down, but keep some money back that you can live on. So we just tried to explore as many options with people as we can to make sure that we're really doing the right thing for them. We're really trying to look out for their needs, not what we think is good, but what they think is best for them. And sometimes the kids get involved too, which is fine, or an advisor gets involved, which is fine. We want to make sure everybody's on the same page and understand why they're doing this, so why they're considering it. But I would say this, probably, and I don't think I'm exaggerating, I would say about 10% of people are going to be okay. They have enough money. They don't need a reverse mortgage. The other 90 really need to look at this, because we all have three buckets of money we access: wages or income, assets, investments, and then equity. And when we access or unlock equity, it allows everything to last longer.
Well, that makes perfectly good sense. And with the rise in mortgage interest rates in the last few years, which I still laugh at because my first home mortgage was I think it was just under 10%. It was either 9.25 or 9.75. We can't really remember which way. Let's just say 9.5. That was great. We were thrilled. Got our first house, teeny little house, 0 lot property line, not the best neighborhood, but it got us launched. And then we bought our next house, and then the real estate market fell apart, which did not help us at all. But then, I lost my train of thought. I hate it when I do that.
Talking about interest rates?
Yes. So we had a lot of seniors who are kind of stuck in place. They might want to downsize, but it would actually cost them more. So that sounds like they would be an ideal candidate to talk about this product.
Yeah, I hear that a lot. People don't feel like they can afford to move, but if they understood, they can take the equity or some of the equity from their current house, buy a house that better suits them, make one large down payment, and not have a monthly payment. Their lifestyle is actually better. Their living conditions are actually better than what they had at the house they've lived in for years.
Well, especially if I have crappy knees and my office is downstairs. The majority of the living space is not, it's all on one floor. So that's okay. But, I get worried about not being able to come down to my office and do my stuff, but that's a different worry. So you think most people feel like they're stuck in place because they don't know about reverse mortgages?
I do.
Makes sense. Because you could also,
they have a bad reputation because from 1961 to 1988, they were not regulated. The very first reverse mortgage was taken out by a widow in Vermont. She could no longer afford to make the payment. She knew a local banker because he had played football for her husband, who was the local high school football coach. and went to the bank and said, what if we allow this lady, this widow, to no longer make her mortgage payment? She has a lot of equity, but no longer make a mortgage payment. We charge interest against the equity each month. And the very first reverse mortgage was born, 1961. For 27 years, it wasn't regulated. And so some people got taken advantage of. Some people lost their homes. Now, that's why they still have this bad reputation. Well, I know I got to sign my house over to the bank. That hasn't been true since 1988. But these things die slow, right?
Yeah.
And as I said, the government has worked hard to improve it over the years. So now, I mean, it's very safe and it's very well regulated. And I tell people, I say it's good news and bad news. Good news, it's a government loan. Bad news, it's a government loan, because they complain about all the paperwork they have to sign. I'm like, well, this is the stuff that's protecting you, you know?
That's true. I'm in California. They kill several trees just to buy a house. The paperwork is ridiculous. And it's not paperless yet. Come on, guys. It's 2025. I'm just amazed at how we've bought 1, 2, 4 houses. And each time the paperwork just gets worse. And that's not government. That's just, well, it's California's government dictating certain things. But that's a whole other podcast. So the stories about outliving the equity that you're using your reverse mortgage for, those are old days then?
Well, I'll say this, on older loans prior to 2015, where you could borrow, 60%. So here's how somebody could end up over leveraged. One, they have it prior to 2015. 2, they outlive how long the FHA projects them to live in their home. 3, interest rates remain high. Property values decline for years. And they've pulled money out early in the process. So now the interest is growing faster. And so now let's just say, for example, that does happen. In our example, the $500,000 house is now worth $475 and they owe $525. Unlikely, but possible. This is where the mortgage insurance kicks in. So they're $50,000 underwater. The mortgage insurance steps in and makes up the shortfall. Or the heirs, the direct heirs, the kids, can buy the home at 95% of the appraised value. So on a $500,000 house, that's $475. So they can buy it for 95% of what it appraised for. If it appraised at 500, it'd be 475, even though there's 525 owed.
Interesting. It's definitely changed. So I'm really glad we had this conversation, because I'm a very, very frugal, very financially motivated person. Not for, just for security. I don't need stuff. I'm, just, it's just the way I am. Very frugal. So you got my little brain is just spinning away here. I will be 59 in November. My husband will be 61 in October. So we're getting kind of close. Gotta wait a few years anyway to get a little more equity, although it's definitely grown in 3 years. Just not as fast as it did in prior decades. Which is probably good, but it's just interesting because, like I said, I didn't know this stuff, and I got your book and I read that, and now we've had this great conversation. And is there any last tidbit of information you want to share with the listeners? I'm hoping we get some that are not just caregivers, because I feel like this needs to go out to everybody.
Yeah, I had lunch today with my daughter, and she was saying about her friends have senior parents, and that she wanted to do a podcast with me like this to educate the kids. So I would say just get educated. And I don't mean by Dave Ramsey and Susie Orman. They're misguided on this program. They're great on some other things, but they are wrong. And then the internet's outdated. You go on a website, you don't know the article or when it was written. So a lot of the negative stuff is prior to 2015. So one is get educated. People can go to my website, reversemortgagerevolution.com, blogs, FAQs, videos, interviews, lots of great resources there. They can download the guide I mentioned, the consumer guide, which is very, very helpful. They can go to my YouTube channel, reversemortgage.video, watch some short educational videos. But yeah, get educated. The second thing is, if you do decide to do it or you want your parents to do it, work with somebody who specializes in these. So there's 155,000 mortgage originators in the country, 155. Only 8,000 last year did a reverse mortgage, closed a reverse mortgage. So that's like 5%. So you got to really find somebody that knows what they're doing, a reverse mortgage specialist. And then 3, my bias, work with a broker, because a broker can really save you time and shop for you.
Yeah, I've done that with mortgage loans. So it makes sense to me, being sort of tangentially related to the industry or connected to the industry. It makes sense to me to have somebody that knows what they're looking for look for you. I don't know what I'm looking for. I mean, I kind of do. So that makes perfect. I don't think that's biased. I will make sure that Kevin's.
And if someone really wants to work with a true pro, there's an organization called NRMLA, National Reverse Mortgage Lenders Association, and they offer a credential called a Certified Reverse Mortgage Professional. Only 220 people in the country have it, and they have enough experience to sit for the test. They've passed the test. They commit to a code of ethics, and they commit to continuing education. If you can find a CRMP, that's even better. There's only 220 nationwide, but that would be somebody that really knows this backwards and forwards and is going to really do the right thing for the client.
220 is not very many in this country. And I know you're one because it's on the bottom of your book. But like I said, Kevin's website and YouTube channel will be linked in the show notes, so you guys can go get more information and contact Kevin if you've got questions. And I really appreciate that you came on to educate me and my listeners. And I'm just really thankful that you came.
Thank you, Jen. I've really enjoyed our time. I appreciate it.